morning everyone, I'm Kunal Sodhani from Shinhan Bank India, a part of Global Trading Center. And everyone is just thinking about, Rupee has been depreciating and it's almost near the all-time lows. So what exactly is happening? What do we perceive? How do we go ahead? So first of all, we break down into domestic as well as global factors. Talking about domestic factors first, if we see the FPI inflows, we have seen around $22 billion of inflows since March till August 2023. But off lately, if we talk about the month of September, we have seen almost 11,000 crores of outflows as well. So there is some kind of consolidation obviously been seen in the equity markets as well, which obviously flows remain one of the important criteria for dollar rupee pair. If we talk about the Brent crude prices, it has to be a cause of concern because it's acting like a silent killer. So it's roughly around $93 per barrel at this point in time, and obviously the inflation forecast as per the last monetary policy had been around $80 per barrel. So inflationary pressure can be persisting from here on because it can have a spiral effect on the trade deficit as well as the current account deficit numbers as well. So that remains a cause of concern for me at this point in time. So some kind of cool off obviously may give some breather to the rupee, but at this point in time may keep rupee under pressure for some more time. Also, if I talk about the FX reserves, RBI has been quite active, seen intervening in terms of the FX spot as well as on the forwards, which has been a reflection where the last highs which were seen in October at around 83.28, those levels are seen somewhere getting protected. But it's not about any level perseverance in mind, but there has been some kind of intervention around 83, 24, 25 levels. On the global front, if we talk about Fed speakers continue to remain hawkish, which is obviously a reflection in the probability of one more rate hike in this year itself, probably in November or December. So the Fed tool says, the Fed watch tool says that around 77% of the probability still remains of one more Fed hike. On the other hand, if we talk about the 10-year US Treasury yields, basis on this optimism has rallied towards almost October 2007 highs of around 4.56%. On the contrary, if we also see in line in sync with the dollar index again rising towards 106 levels, technically I think 106.70 may act as a resistance immediately, but a break of it keeps it open towards 107.5. So these levels were last seen in October or November 2022 itself, so last year. If we talk about ECB, how they are progressing, the Christine Lagarde's speech has been quite deceiving because they are just giving more pessimistic view towards the inflation may remain high towards more coming in the coming years to come as well, not only for months. Jobs is a problem, economic growth remains a problem. So taking all into cues, euro obviously is taking a beating at this point in time. Overall, if we form a view here, one more factor to consider first before forming the view is dollar CNH pair, because the way Chinese yuan has been holding around 7.3 levels, if a break comes above 7.35, then again some pressure would be seen. To put all these into perspectives for how the dollar rupee pair will fare, we expect dollar rupee to trade within a range of 80 to 70 on a lower end, while 83.30 remains an immediate resistance. But it is a matter of time if in case we see a break of it, the playground obviously remains open, so which means we can see levels of 83.50 getting tested as well. So base remains 82.70 at this point in time. In terms of important data points, I think the inflation gauge for that is a core PCE index of US will be important to watch out for this week. So that's all from my side. For an importer and an exporter, I would advise to keep on hedging their exposure at least in partial terms, not try to eye top and bottom. So that's all from my side, friends. Hope this video finds some insights to you as well. Thank you so much.